Hey folks, welcome back to the channel where we talk about investing in the stock market, which has been pretty exciting lately because the SPY just reached a new high of 482.43. This is the first time ever that it has closed at this level, and it's either going to go higher from here or this will be more of a double top, which parallels the January high of 2 years ago, and it's going to go down a lot from here, trapping a lot of bulls. So in today's video, let's take a look at what the technicals have to say, and I'll give a brief update on what I want to do for my SPY options challenge for this year in 2024. So last week over here where the market closed on Friday, I mentioned that the chart looked bullish, and even though the stock market did seem overvalued according to David Rosenberg, it doesn't necessarily mean we're going to get a pullback right away. So the most important thing is to follow the price action, and when we looked at the technicals from last week, I mentioned to stay bullish because the 9-day exponential moving average, this green line, as well as the 21 EMA are both heading upwards, and until the market closes below these two lines, and especially if the green crosses the blue, that would be a bearish indicator, but otherwise stay bullish because the market is likely to go higher, and that is what happened this week. It came down here on Wednesday and closed at about 472.4. You can tell by this candle that that's a bullish sign. One reason is because the market closed above the 21 EMA, and also because of this dragonfly doji, which is a reversal pattern where the market goes down during the day, but by the end of the trading session, it closes back up to roughly where it started, suggesting that buyers have regained control, and it's likely that the downward trend is over and the market is getting ready for a potential uptrend. And that's what happened on Wednesday. We got the dragonfly doji, and it was very bullish after that. So what's going to happen for this upcoming week? Well, it's still looking pretty bullish. I know some people think that because we've reached all-time highs, it probably means that we are near a peak and will likely see some kind of reversal in the trend. If I go to the weekly chart, we can see this a little more clearly, how we had this huge run up from October of last year in this very steep angle. So it probably gets some kind of pullback from here, leading to a double top. However, this is not the best way to think about it because all-time highs in the market are usually followed by more all-time highs. In fact, if you look at the Dow Jones index, which has historical data going back to over 100 years, there has been on average about 12 new all-time highs every single year. This is according to portfolio manager Ben Carlson on his website, A Wealth of Common Sense. So when we look at the S&P 500, it just seems like all-time highs are pretty rare because we haven't reached an all-time high in over 2 years. But we have to keep in mind that historically speaking, all-time highs are pretty frequent. So we may get some kind of shallow pullback. If I go back to the daily chart, you can see I have this channel here that the S&P 500 has been respecting, and we could get a small correction back to this support line of this channel before heading back and making even higher highs. As usual, I mentioned this last week as well, but we can take a look at the VIX to help us gauge where the market might be going. Last week, I mentioned volatility was getting to the bottom of this channel, and it was most likely going to head up, which it did, and that would likely correspond to a small correction in the market, which it also did. We had a couple of down days before the pop. So if the volatility index bounces off this area again and it heads higher, then we could see the S&P 500 making another small correction like it did early last week. But I would continue to stay bullish as long as the market continues to stay above this level, about 4779, because this was previous resistance a couple of times. And the green line, the 9 EMA, is most likely going to continue working its way slowly up. And I wouldn't get bearish on this market unless it breaks the bottom of this channel, this blue line going up this way, because this represents support over the last few weeks. So above this purple line, I'm bullish. Between this purple line and the bottom of this channel, I would be pretty neutral. And frankly, if the market was in here, then the EMAs would reflect that movement. Like the green line wouldn't be going up anymore. It would probably go sideways. And then below this blue line, the bottom of this channel, I would be bearish. And that's just purely looking at the price action. If we go to the weekly chart, we can see that everything is looking pretty bullish here as well. The price is above both the green 9 weekly EMA as well as the 21 and of course the 50 as well. And you can see this current blue channel that we're going up is really just a continuation of a channel that started back here in April of 2023. And then what happened was the market got overextended on the top side, so it mirrored that on the bottom side and it got oversold before coming back right into the channel again. So the trend is always your friend until it isn't anymore. And right now there's no real reason to get bearish. Now, in terms of my SPY option strategy for this year, what I want to do is try the wheel strategy using the SPY. And if you're not familiar with this strategy, it's basically going back and forth between selling put options and selling call options so that you're constantly making a premium. So for example, at the beginning of the year, I sold some put options and they were filled at 474. I am holding 400 units of the SPY. But now that I have the units, you can see I am writing covered calls on them. So I have a 475 call expiring on Monday and then a 477 call expiring on Friday. Now these are already in the money because of course SPY is at 482 because I wasn't expecting this massive bullish candle on Friday. But if SPY gets called away at these prices, then I still make a profit because I bought SPY below 475 and 477. And once all of my SPY units gets called away, then I will go back and write puts. So that's the basic idea of wheeling the SPY. And of course, I can always roll my options because sometimes it's better to do that than to get out of the position right away. In any case, I'm going to make a new video just on that topic, the options challenge, in the next little while. And just like last year, I'm going to give weekly updates on that. In the meantime, you can click over here to watch my detailed video about the wheel strategy and how it works. But that's going to be it for now. Thanks a lot for watching, and I'll talk to you in the next one.